I think it's fair to say that when I look back on those dim, dark days back in March when share markets had seen a very sharp sell-off, after that we saw a very sharp bounce back in financial markets as well. And that trajectory of markets going up has continued, and share markets have continued to be supported. But what we have seen is the trajectory of that recovery flattening off a little bit. And if I look at the New Zealand market in particular, we measure that by the NZX 50 index, we've now climbed back to levels above where we were at the beginning of the year. We're not quite at those all-time highs we saw in February just yet, but we're steadily increasing, we're steadily looking like we might challenge those all-time highs. We're seeing a similar response in the S&P 500, that's the main index on the US share market, and we're also seeing that share market and the other indices over there, particularly the NASDAQ index, also be well supported. But one of the real stories over the last month has been the continued fall, not only in wholesale interest rates, but in retail interest rates as well. And I think if you go out there now, you will struggle to find, in fact, I don't think you will be able to find a term deposit rate from one of the major banks that is over 2%. But share markets and investors are really reacting to two key factors. The first one is the economic recovery that we're seeing after that dislocation through the March-April period is happening quite a lot faster than we had expected. So when we look at economic data, when we look at the economic statistics that are coming out, they're almost continuing to surprise us, and almost always to the upside. Only in the last week, we've seen the unemployment rate come out in New Zealand at 4%. It actually fell. It was at 4.2% in the March quarter. So employment's actually improved. In the background, I think the labour market has deteriorated quite markedly, but we're not seeing that in the figures yet. So I think investors are heartened by the fact that we're seeing those economic surprises. So what we're doing at JMI Wealth now, though, is we're keeping our portfolios relatively close, relatively neutral to their long-term strategic asset allocation positions. So what we're saying is almost all portfolios do have some exposure to share markets, and those more aggressive portfolios obviously have more exposure. But what we're doing is we're keeping them pretty close to those neutral long-term positions. In other words, we're not going out on a limb and we're not taking any extra risk. But we are continuing to monitor markets very closely, and we'll adjust those portfolios accordingly when we see market conditions change. So that's pretty much an update on the last month, and I look forward to talking to you again on the next update.